Many startup businesses and small businesses, as they begin setting up their banking, make a lot of mistakes, unfortunately, and they're so easy to rectify as long as you start the way you mean to go on. It's really important to consider how you're setting up your small business banking right from day one. Often people get really excited about a new product or a new service that they're offering to a community and put more focus into that, and rightly so. But unfortunately, they don't set up their business accounting and banking in a way that actually works for them to ensure future success. So today I'm going to talk about a couple of tips and tricks that could make life easier for you so you don't run into the same small business mistakes that many people make when they start their banking. So some of the key mistakes that people will make is the first one, into mingling their personal and business accounts. It's really important that you set a separate business account and a separate personal account. There's very minimal cost associated with this, and basically some small investments of time at a local bank, and all of the local banks will provide you with a business banking account. What this means for you is it gives you the opportunity to keep your transactions separate. So when it comes to year end and looking at what are business expenses versus personal expenses, those items are already very clearly separated. And it helps to justify, for example, with people like Canada Revenue Agency, that the expenses that you have occurred because they've gone through your business account are actually business related expenses. The second mistake that a lot of entrepreneurial startup businesses or small businesses make, they tap out their personal access to credit and don't often treat it with the care and respect that it actually deserves. So they'll leave outstanding balances on credit cards, not make minimum payments, overdraw their accounts because they're growing their business and they need access to cash. This actually has a fundamental and long-term effect on not just only your business's access to credit, but your own personal access to credit. So a key tip for me is approach your bank and talk to them about your needs, and start from day one to try and establish some really small credit in your business's name, but using your personal assets to secure that. So quite often businesses don't have history, so there's an apprehension to lend to that business. But setting up a small business credit card, for example, can lead to creating a good credit history for your business, but also put you in a position where you have started to separate, again, those funds and those transactions between personal and business credit. So there's a couple of key differences when you're setting up a business, and a lot of people don't realize that they can separate their business from their personal assets and transactions by registering a trade name. And a trade name registration is very simple to do. It can be done through a government website, and also it's very important that you should do a business search before you actually register that name. No longer can you just walk into a bank and say, "Hi, I want to operate as Katie Cheesmond Trading." I need to actually search, and I need to pay the very small registration cost associated with registering my trade name. What that allows me to do is then receive payments to my business in that name. So once I send an invoice to a customer, for example, or I sell to somebody, maybe they want to send a payment, write a check, I can actually clear an item that's made payable to my business by doing that. The problem and the confusion that people get into is they feel that they need to incorporate, and that's not necessarily the case. You can listen to one of our segments and business advice segments on when's an appropriate time to incorporate. That's a very separate issue. So although you as a sole proprietor are still responsible for the business credit and the personal credit, the business account and the personal account, they are just kept separate for the means of recording which transactions are business related and which ones are personal related. When you set up a new business, it can be a question that's asked, how many accounts do I really need? Well, step one is a personal one and a business one. Step 2 could get into a number of different business banking accounts. So as your business grows, you might need a savings account. You might look to have a separate account that just your payroll clears through. And again, you might choose, if you're receiving electronic payments, to receive those into a separate account. But the bottom route for all businesses are just keep those personal and those business transactions separate. In a situation where you commingle personal and business transactions, you actually have to work through line by line yourself or with your bookkeeper to work out which are business transactions and which are personal ones. If that's not clear, what can happen in the long term is if you were ever to be audited by CRA, they would question which transactions are genuinely personal and genuinely business. In that situation, if everything's in one bank account, you want to be incredibly diligent at keeping your receipts to be able to justify which are business and personal transactions. So there's an awful lot of savings in time, for example, by setting up a business bank account where all of those transactions are related to the business right from day one. Again, you're going to keep your receipts to justify those transactions, but it keeps a very clean record. The next thing is, if you set up a business credit card, you're in a position where line by line you don't need to reconcile payments. You're going to have one payment coming from your business bank account to pay that business visa, so a lot less ongoing reconciliation. I always recommend that you keep your personal and your business very separate. So you're in a position where possibly you're looking to take personal money from a business account. If you're going to make transactions, I recommend that you move lump sums of money into your personal account and then make those transactions from the personal account. You don't actually make personal transactions from the business account, because you're back to step 1, a personal account with business transactions or a business account with personal transactions are the same level of chaos and confusion for your bookkeeper. So as your business grows in sophistication, there are a number of different add-on items that all of the banks can offer to you to make daily record keeping and transaction maintenance an awful lot more straightforward. So day one, a lot of people that are sole proprietors, that if you're the only person who needs access to your bank account, you're probably going to use your personal online banking and sync your business account onto your personal online banking. That's great if it's just you that's accessing that information with one password. You're responsible for making payments or moving money between those accounts. The degree of complexity comes when you have a bookkeeper or other third parties that are working for you or operating for you. And at that time, there's a business online banking platform that helps you look at those business accounts and make transactions out of those business accounts, again, more efficiently, because it's all in real-time reflection. So the balances are what the balances show on the screen. The problem with that is you are opening yourself to situations of possible fraud if you don't transition from personal online banking to business online banking, because the business online banking module gives you the ability to set read-only access, it sets limits on transactions, and it also gives a separate login to anybody who's not yourself as the owner. So there's an audit trail of who's actually moving money and making payments inside your business. So if your business has grown in level of sophistication where you're doing business in other currencies, you are in the bank size, then a more complex business. It's not actually driven necessarily by the dollar value of transactions, but the actual currency of the transaction. Many people aren't aware that you can't send a Canadian check to the US, for example, and just automatically have that clear. You can't actually send a Canadian US dollar check to the US and have that clear either. There's actually a requirement for par crossing, which means that the Canadian government and the US government have agreed that you're in a position to make those financial transactions cross-border. So for small businesses, I often encourage them to look at other ways of sending payment. You can send a wire transaction, which again has a cost associated with it. So if you're not doing that very frequently, that could be a way for you to make a successful payment to the US. But most frequently, a lot of vendors now in the US will accept a credit card payment. And again, given the size of your business and the volume of those transactions, it's definitely worth a conversation with a banker to see if that US payment via credit card is actually more effective and less administrative than looking at something like par crossing with the US. Then when you move into other international currencies, you're definitely working in space in the Canadian market where you can have access to a euro account, but many other accounts require, again, more complex foreign exchange transactions, and that's definitely a conversation for a different business conversation. There's certainly a conception in the market that you should keep your business and your personal banking separate and go as far as having those at different financial institutes. For me, my recommendation to many small businesses and starting businesses is, for efficiency, you probably want to keep it with the same bank. That also gives you the opportunity to share existing information that might already be on file. So again, when you're looking to apply to access credit, there's actually a number of benefits associated with your tenure and your history with a bank. So to many small businesses, you would actually find more success of gaining access to business credit based upon your personal credit score. And if you've been working with a bank and you already have personal bank accounts, personal credit lines, a car loan or a mortgage with a bank, you'd actually be in a situation where quite often it's easier for that bank to start some small and simplistic business lending for you. One of the key pieces of advice I give to any small business is surround yourself with strong advisors. And right from day one, it's good to establish relationships with bankers, lawyers, and accountants. They're kind of the trifecta around you that are going to help your business succeed and grow. And it's also really important that those three individuals, whomever they may be, can also work closely together. Because when you're sharing information, you want all of your advisors on the same page to know where your business is growing and to set you up for success.